Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Costco is looking a whole lot more like Netflix, and that's because they announced that they're going to cut down on membership sharing. Just like Netflix did not too long ago, they said, look, y'all gonna stop sharing these passwords. We're going to force you to go and get your own Netflix subscription. Costco saw that and said, look, y'all are sharing membership cards, y'all are costing us money, we're going to cut down and start asking people for IDs, and they better match the card that you have on file. So here's what's going on. As I just mentioned, Costco's losing a little bit of money by doing this, and Costco operates a little bit differently than most retailers. Most retailers will charge between 20 to 50% on items, and that's how they make their money. So for example, a Walmart, Dollar General, Dollar Tree, Target, whoever it is you want to throw out there, they will buy an item for $100 and sell it to me and you for $150. That is a 50-point spread. It's a $50 profit margin that they are going to have from buying and selling items. Retailing is basically what that is. Costco, though, their comparative margin is about 10%. That's it. They will buy that item for $100, sell it to me and you for just $10. That ain't a whole lot to run a multi-billion-dollar company. So how does Costco become profitable? How do they make so much money? They do so by memberships. That little $60 a month adds up. Okay, it adds up in a major way. And then also, to make things even better, they have a better than 90% retention rate. When people get a Costco membership, they hold on to it, and it's why their customers are so loyal and why employees are loyal as well. So it makes a lot of sense that they want to make sure they protect their membership revenue stream. Okay, because again, that makes up more than half of all of the revenue is just memberships alone. They call that pure profit. They don't have to do anything but sit there and collect the money, right? They don't have any overhead for membership by itself. But again, they also have the retailing arm. So that is what they're trying to do. Now, if you're looking to buy this stock, there are a few things that you should know. One, full transparency. I've been owning Costco since like 2019, 2020. If you have been on my email list, and you should be, that link is in the comments below, you know that I've been talking about Costco for years. Okay, for years. I bought it and I ain't sold it. And I'm not going to sell it now either. However, this could be a decent entry point. The reason why I say that is because, very similar to Netflix, look what happened, right? They cut off password sharing. They were forcing people to get their own subscription. And in this case, they're like, hey, it's, $5, $6, $7, $10, whatever Netflix is. You can probably afford it. And that is one of the reasons that Netflix has done so well, including all the other titles and things that they have been doing in the background. Costco is like, hey, look, it's only $60 an entire year. That's it, and you know you're going to save. And that is the other thing that sets Costco apart from all these other subscription services, even those that aren't necessarily equivalent. Like, yes, you have Netflix and Hulu and YouTube TV. Those are all entertainment products. But if I am looking to save money, and most people are because inflation is still high, student loans could be coming back online for millions of people, you'll be looking to save money. And I got to look at my subscription and say, look, one of y'all has to go. I am less likely to cut a Costco because one is only $60 a year, but also I want to save money. Costco is my passport, my membership to go and continue to save money, and that's not something that you're likely to cut. It's also because you can get your groceries there. You can get your rotisserie chicken and your hot dog for the same price you got it in 1990. Right? You can still do those things at a Costco that may not be as relevant or as necessary as some of the other streaming services that people are paying for, because I do think we are at a subscription, I want to call it bubble fatigue. Yeah, not a bubble, but fatigue in terms of paying every single month for every single thing all the time. Something got to get cut somewhere, right? And I think that for most people, Costco is one of the first places that you are not going to cut, and especially in a place that is necessary, right? You're going to get your groceries anyway. Why not get them for a place that you can get it at a much better price than 9 or 8 out of the 10 other retailers that you can go to? And don't forget, they have very cheap gas too. That's an option for you as well. And I'm not here to sell you a Costco membership, okay? I don't even have one. I ain't been to a Costco in my life, but I am an investor in Costco. So that is some of the things that you might want to pay attention to. I think it could be a decent time to invest. Before you do, as always, I want to show you, or give you rather, a comparison of where Costco is compared to the entire stock market. In some respects, it is underperforming. I say that because over the last 6 months, Costco has made 15%. That's great. The S&P 500 has grown by 14%. Okay, you're beating the S&P 500 by just 1 percentage point, with a lot less risk there. However, Costco does pay a solid dividend, so do factor that in as well. If I back up and say over the last year, how has it performed? Costco has gained about 10%, while the S&P has gained about 12%. The S&P 500 is about 2 percentage points better. Even if I go back 5 years, they're roughly even. They're very, very close in terms of performance. So I could take much less risk by investing in an index fund than I can by investing in Costco by itself. I might make slightly more by investing in Costco than the overall stock market. So do pay attention to that. And again, it does pay dividends, so it might be a benefit to you. For me, Costco has worked out. I also bought it several years ago, so perhaps I had the benefit of buying relatively low, but I do think that Costco should, on paper, have a solid run over the next 6 to 12 months. And that's because once you start to see them cut off this sharing of memberships, you're going to see the company become a lot more profitable. Some portion of the people who are sharing these cards are going to get their own, because once you get addicted to savings and once you enjoy a particular benefit, you're likely to pay for it. And again, it's only $60 per year as opposed to every month, right? That would be a tough ask, or at least a higher ask for a good number of people. Okay, so I think Costco is a solid stock to buy. Let me know what you think. Do you already own it? Because some of us have been holding on to the stock for a while because it has been a really solid gem. So let me know what you think in the comments.